Propertyology regards right now as a very exciting time for investing in Australian real estate. There are some fantastic opportunities that Propertyology can help you take advantage of before buyers re-emerge from their coronavirus cocoons. Propertyology has a national focus. Now more than ever, experience and knowledge are the most valuable currency. Propertyology has that in spades. To find out how Propertyology's multi-award-winning buyers agents can help you prosper, contact them now at propertyology.com.au.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Okay, everyone. How you going? Thanks for joining us on the podcast as we navigate this crazy maniac world, which is property investment. And we love investor stories here. It's what we do. We've been giving the inside view of property investors for near a decade now across Smart Property Investment, originally within the print product, but now on the very popular Smart Property Investment Show, which is a real privilege for me to record and host. And I meet property investors from right across Australia and also property investors internationally that choose Australian property as an asset class, and they're doing very well with it. So we'll keep these stories coming. Today in the studio is a property investor, Anjay Zazulak. We're going to chat through his journey investing in property, and I hope I got your name correct, Anjay.
Yes,
How did I go?
did. Not bad first take.
Do most people get it wrong?
Yes.
Zazulak. Where's that from? Zazulak?
Polish.
Polish.
Yeah.
Okay.
The first name's spelled A-N-D-R-Z-E-J.
A-N-D-R-Z-N-J.
That's how you pronounce it. Yeah.
Okay. Were you born in Poland? Born out here?
New Zealand.
Are you from New Zealand?
I'm a Kiwi.
Oh, okay. Well, I didn't know about this before. I don't really like getting Kiwis on the show. They
Snuck
come
in
out here, sneak in, taking all our properties, and there's more Kiwis here living here than what there is in New Zealand these days, isn't it?
That's what I hear.
Yeah. No, you're welcome. We love the New Zealanders, and it just goes to show how accessible Australian property is for Kiwis and vice versa. And I think it's really good that happens. As long as you don't beat us in rugby, we're all okay. So when did you arrive in Australia? What's the story there?
So I arrived here 17 years ago. My parents came here 20 years ago. So they're Polish immigrants that moved to New Zealand after the war.
Okay.
And then grew up in New Zealand. I guess a bit of the background is my dad was the CEO of McDonald's in New Zealand. And I guess my property journey started through him. So when I was about 12, he was buying 1 to 2 properties a year and renovating them. So I just thought my weekends were spent renovating kitchens, stripping wallpaper, ripping up carpet. And I just thought that's what every kid and family did, but apparently not.
Well, it's given you a good apprenticeship in doing what you're doing right now. So your old man ran Macca's out in New Zealand. What was it, about 2 McDonalds out there? One in Auckland, one in Wellington, was there? Or were they all over the place? Oh, sorry, I can't help but give Kiwis a hard time.
I guess when he started, he was the chief financial controller.
Yeah.
And he came in around 1985, and there was about 30 stores nationwide. And when he took over as managing director in around 91, he took them from 30 to 150 stores in the space of 5 years.
Wow. It's pretty good going.
Yeah, and then retired at 46.
Okay. So actually stopped working and that was it. Okay.
Full stop.
And you said, so he was buying property during that period of time when he was a senior executive within McDonald's?
Yeah.
And was he actually there on the weekends with his sort of work boots on and probably didn't wear fluoro back then, but doing the work, or was he getting other people to do it?
No, he was hands-on. So his dad was a builder.
Okay.
And so his apprenticeship as a kid and during university was helping his dad help him build the homes for other people.
Yeah.
So he said to me his one regret was he didn't start sooner.
Buying property.
So
how old was he when he started buying property?
Probably 40.
Okay. And he retired at 46?
Yeah.
Okay. And then at retirement, did he stop doing everything, or he just still bought property?
So this was about 98, moved to Australia in 99. So he quit work. And then from the time that we were in Australia, we were buying, again, 1 to 2 properties a year.
Okay.
And that was to get away from mum. And
Kept him busy?
Kept him busy. It was just a hobby. So it was just, he took the skill set that we'd done in New Zealand. Because a lot of those properties were on big blocks, and over there you could subdivide and build on the back.
Yeah.
So we did a lot of those, or we was building or subdividing, getting the DAs and selling them off. And then when coming to Australia, we first moved to the Upper North Shore. And I guess the price point, the first one I remember was in Chatswood. We bought for 500. You'd spend 300 grand tidying it up, and then we sold that one for 1.1. And we bought another one in Roseville where we bought for 500, spent once again 250, 300, and ended up selling that one 5 years later for 1.4. So we just saw there was a great opportunity in how to find properties at the right price,
renovate
them to add value, and would tend to hold them for 3 to 5 years before either keeping them or flicking them on.
So it's a strategy which has stood the test of time and continues to stand the test of time, buying property well, adding value to it, sitting on it for a little while and then selling it. Or did you keep it in these properties at all to build up a portfolio? Did you offload them, or was it just to continue just trade through the properties?
No, for the first 10 years, we kept a lot of them.
Yeah.
So we had probably at least 20.
Okay. And they're good assets, right? You're talking Roseville, Chatswood, which are, the median prices in those areas now would have to be, about 1.2, 1.3, maybe
higher.
James can find out for us. He's our producer here.
So we purchased at least 20 properties in the lower and upper North Shore in Sydney.
Okay.
Over the last 20 years.
That's pretty good going.
Yeah, so from Mosman, Cremorne, Neutral Bay, up to Pymble, Wahroonga.
Okay.
Average price, probably between 1 to 2.
So the family's sitting on the nice big fat property portfolio there.
There's a nice nest egg there.
There's a nice nest egg there. So you don't have to work then, right?
I don't have to, but I do choose to because I like what I do.
Sort of a bit off the cuff, but did you speak Polish at home?
No.
So imagine your grandparents came out straight after the war.
Yes.
And so your parents were born here, or they were young at that point in time?
So mum's from Scotland. So her parents are half Scottish, half Polish.
Okay.
So I guess on dad's side, they're both Polish. So English was his second language. So he went to school and he had to teach his parents how to speak English.
And does your family still identify being Polish, or are you Kiwis, or are you Aussies?
I don't know. Yeah. Definitely not Aussie. I don't know. I class myself as Kiwi European.
Yeah.
Like I do like my, I guess, European ancestry. But then I don't classify myself as a Kiwi.
Yeah.
I don't know if I want to be a Kiwi, but I'm not an Aussie either.
Well, yeah, we don't want to claim it. But so what's the Polish attitudes towards property and property investment? Because it's really interesting, and as I mentioned at the start of the podcast, I get to chat with a lot of property investors, and, the commonality with most property, I don't know any property investor that doesn't invest in property to not make money, right? There is this underlying theme of investing in property to help control a better and brighter future for yourself by having choice through having more money, right?
Yeah.
But every different culture has a different attitude towards debt or different attitude towards ownership of property. And Europeans, there's a very different way they structure property today than what we do in Australia versus, up into Asia, their attitudes towards debt and property. How would you identify the Polish attitude towards property investment or ownership of property?
Tough one. I'd say it's two-pronged.
Yeah.
You got some that would just buy their own home and that's your home for life, and then don't realise you can use the equity to then invest. Where on the flip side, I think the more educated ones, and the ones that want to get ahead in life, they use it as an opportunity to then use it as a platform. So it's just, I think from dad's parents and my mum's parents, they were build the home and that's kind of where you grew up. Neither of them really invested further.
And is that changing? Your dad's still investing in property now?
Yep. So we just bought another one at Christmas time.
Okay. What sort of structure is it? Like a family trust type thing, or you buy in conjunction with him and he does all himself, or?
It's a mix. So there's trusts. There's quite often we'll purchase them in both names, so then one of us will live in it. Okay. So that way you can get around capital gains.
Fair enough. And do you do some investing yourself outside of the stuff you do with your old man or within the family?
Yeah, I have been. Circumstances have changed over the last few years with health issues.
Yeah.
I'm looking at investing again later on this year. Albury is an area that I've liked for clients, and looking at doing myself where you can purchase something for under $300,000 on 800 square metres plus and then subdivide and put some townhouses on the back.
Well, let's have a chat about that, but we'll just go to break beforehand. We're back in a moment.
The Trident formula, created by Sam Gordon at Australian Property Scout, is the strategic way to build a profitable property portfolio. If you're looking to perfect your strategy, go to www.australianpropertyscout.com.au to book a call with Sam himself.
Welcome back, everyone, here with Anjay Zazulak. I got that right. We're chatting this journey from Poland to New Zealand to Australia. You're in Auckland, I imagine?
Yes.
Yeah, okay. If I sort of met your old man and just chatting at a barbecue or something like that, and I mean, what do you do? Would he say, I'm retired, or would he go, I'm a property investor or work in property?
He would never probably tell you about the property stuff.
No.
No.
He'd just be like,
He goes, I've got a few properties.
Yeah. Bits and bobs.
Bits and bobs.
Keep it quiet.
Yeah.
Is he going to be annoyed with you talking about the property portfolio?
Probably.
We'll leave it on. Anyway, but you mentioned, buying properties in Chatswood and Roseville. When was that? The early 2000s, right? It would have been sort of 500 grand you were paying for them and stuff?
That was 2000, yeah.
Yeah. Sorry, James, our producer. What are the numbers on those suburbs at the moment?
Yeah, so I got Roseville up here on smartpropertyinvestment.com.au. So in terms of a house, median price at the moment for a house in Roseville sitting at 2.438 million. So it's obviously seen a bit of growth there. A median quarterly growth of 1.37%. Over 12 months, it's seen a negative 9.28% median growth. Median 3-year growth has been 7.4%. Median 5-year growth, 28.32%. With a 10-year average annual growth of 7.11% and a gross rental yield of 2.45%.
Yeah. There's always going to be low yields out there, but a couple of growth on that's.
What about Linfield?
These are all sort of boutique North Shore property suburb addresses, right? You know?
Yeah.
That's huge. What was it?
2.438, yeah.
Got two other examples of ones that we bought up there. I think the key for us is buying well. And one of the ones that we bought up in Linfield near the train station, it was, I think, around 2012, 2013. We got it for 1.4. The home was terrible. And we spent
like
about
a freestanding
home on
red
800
brick type thing, brown brick. Yeah.
Yep. Barely livable, 850 square meters. Did a renovation on that for about 400, 450. And then, it capped out last year around about 4 mil.
Okay.
But then we had an approach from a developer because it was in the middle. So there was R4 zoning one end of the street, and then there was 3 houses for R3, and then the rest were R2. So we're in the middle of those 3 R3s.
Okay.
So they needed our block. And so they offered us more of a premium on top of what it was worth.
That's nice. You took it?
We took it.
Yeah.
And ran.
It's a lot of hard work and effort putting the reno in, which really was probably largely irrelevant. It was going to get knocked down. But did you know it was zoned that way?
No.
So it got rezoned subsequent to you buying it?
Yeah.
Okay. That's just pot luck, right?
That was just potluck.
Yeah.
And then the other one was West Linfield, which we bought for $875, spent 50 grand on a reno. It's now worth between 1.8 to 2, which we're about to put on the market.
Okay. So just you mentioned, Anjay, that you know, the strategy is you identify property which is well valued, you spend a few bucks renovating it and then look to sell it or do something else with it. A lot of these renos you're doing are pretty significant renos in the hundreds of thousands of dollars rather than sort of a slap of paint, maybe a dodgy new kitchen. How do you go about project managing those? You have the same team that always does the renovations. How does it work?
Well, I guess I've got a book coming up which I kind of talk about that too, but I guess we do 2 types of projects. Ones that require architects and major renovations, and then the other ones are the cosmetic stuff. So the one in West Linfield that we did, that was purely just paint, sanding the floors, kitchen, bathroom.
Okay.
And I guess because we've been buying here for the last 20 years, we've built up a team. So I'd say the key to property investing is, if you're looking at renovating, is building the right team around you. And for me and for us, it's kind of worked on a framework where the team sort of involves around like your finance broker in terms of like refinancing or getting the right terms for the finance. Then if you're renting them out, you've got the property manager, you've also got your lawyers to look through the contracts, accountants to structure them right. But then when it comes to your trades, like for us, the key people are your electricians, your plumbers. Dad did all the painting internally and externally, so we saved quite a lot of money there.
Well, he sat there with a paintbrush and a roller getting it done.
He loves it.
Good man.
We just did one in Auckland where he painted the whole outside and whole inside, so you can save yourself 20, 30 grand there. And then for bathrooms and kitchens, we'll pick them out, but we'll get the experts to come in and do it.
And do you haggle hard on pricing, or you just try and understand what a fair price is and make sure that you get a quality job? Because a lot of people penny pinch and think the best quote's the cheapest quote, which often isn't the case. You're
correct there. I think if you build the right team around, like with the people that we've had, they've followed us around for 20 years. So for us, they price it right because they know they're going to get more jobs. So it's not necessarily about getting the cheapest price. It's finding the right team that suits, I guess, the time frame you're working with and I guess the level of finishes that you're acquiring. So cheap's not always best. I think it's just find a good quality team around you that can do the job for you.
How do you know if you've got a quality tradesman? Like, what do you look out for?
Oh, I think it's trial and error. I think like if it's painting, the stuff's not on point.
You know pretty quickly with a painter, right? Because you can see it, but you don't normally see a plumber. If a plumber does a dodgy job or a waterproofer does a dodgy job, you don't normally know for months down the track.
Correct. I don't think we've ever had a problem.
No?
No.
But I guess you sort of got scale right and repeat work, and people know that they do a good job for you, you'll continue to use them. On that basis, how many sort of projects would you have going sort of simultaneously? Like if you're talking sort of $200,000-$300,000 renos, which is a lot more than a $50,000 job. Like $50,000 job, you're probably in and out in what?
6 to 8 weeks.
6 to 8 weeks.
Yeah.
You know, if you're dropping $200,000-$300,000, you're probably in there for 6 months plus, right? Doing
Correct.
a lot of structural stuff. So
Yeah.
how many of these projects would you have running simultaneously?
The big one's one.
Yeah.
The little ones, you can do them anytime.
And you'll just, if you see the opportunity, you'll grab it. Like, how do you sort of set the speed at which you look to capitalize on these opportunities? If they arrive and you think you can make a buck, you'll grab it and then just work it out, or you're very specific?
I think we've slowed down the last few years, so it's more one a year. In New Zealand, last year we just undertook one major renovation. So we turned a 2-bedroom cottage into a 4-bed, 3-bath, double car home.
That's pretty. Did you knock it down, or was it
No. So we kept it was just a major reno.
Yeah.
Yeah. So that one has been a 6-month project.
Okay.
And then we're looking at purchasing another one just north of Auckland, about an hour and a half out.
How do you go with, and I want to chat to you about Auckland, how do you go about balancing, so you only invest in Sydney and Auckland, is that correct? You're investing out sort of in other...
And Albury.
Okay, so we'll get to Albury in a moment, but with the Auckland-based stuff, do you find it easy renovating in Auckland? You've got the team there, is it a headache? It's only a couple of hours away, to be fair.
I love Auckland because you don't have any stamp duty. So I guess for us, the mentality that we did was, let's say if you got $1 million budget, over here you'd have to allocate 4% for stamp duty.
Yeah.
So we just go off the fact, well, use that 4% as your renovation budget. So in Auckland, there's a lot of homes, there's so much neglect over there. They don't take pride like I felt Australians do. So it's quite easy to look at a home over there, paint the fence, the house, tidy up internally, and you've made a lot of money.
So it's easier to identify value in Auckland versus some of the properties here in Sydney, for example?
I'd believe so.
Yeah.
Yeah.
And why is that? It's just people's attitudes towards houses going, it doesn't really matter too much, or...
I don't think the...
I'm going to get a lot of hate mail from...
Yeah, the Kiwis.
This is not me saying this, is Anjay saying this. So,
I'm from there, but I just think it's a dump.
Yeah.
Sorry, Kiwis.
I was only there the other day. I caught we caught massive kingfish. I don't know if I've shown you these photos. Yeah, it's great. Great fishing out there. I love it.
I think there's plenty of opportunity for the Kiwis that are over there, and if they have the capacity and the money to do so, and it doesn't really matter what suburb you're in, it's just if the owners or the people took more pride in their homes, it's their main asset. So
your basis of that comment is that it's easier to realise the value through cosmetic renovations.
Correct.
Because of just how it's presented to you. So how do you identify a property that's worth investing in when you're investing in New Zealand? Do you do it based on the growth prospects, or is it all about the manufacturing of quick equity through renovation?
For us, it's always been manufacturing of equity.
Okay.
And picking the suburbs where it's sought after demand. Now, Auckland, it's just had a huge growth over the last 3 to 5 years. It's just gone nuts. I guess when I look at things, it's looking at a fewfold. You're looking at how long's the property been on the market? Can you add value to it? And what would it cost to add value to it? But also, what would it be worth once you add that value to it? And if those numbers stack up, then we'll consider it.
So do you have like a pool of money that's in New Zealand, a pool of money that's in Australia, and never shall the two meet, right? Like, how do you move money between the two countries, or it's just siloed or domiciled within each of the nations? Because they go, oh, here's an opportunity. We need whatever out in New Zealand. Did you sort of...
I think it's been a transition because Mum and Dad have moved back to New Zealand in the last 3 months.
Okay. Are they there now?
They've moved over there. So we've sold up a few of the properties here.
Okay.
And so there's hunk of cash lying around.
Which is easy. Like, the good thing about New Zealand and Australia, where, we're so economically intertwined that it's quite easy to do a dual country strategy in terms of property investment.
Yeah.
It's pretty much the same rules, except for stamp duty. I didn't know about that. Stamp duty, that makes it a lot more attractive.
So that's why we like the New Zealand side of things, because it's that you don't have the stamp duty. And we just reallocate those funds for the renovations. And a lot of it can be cosmetic. We bought a 3-bedroom townhouse. So a townhouse over there is different to a townhouse over here. A townhouse over there, it's on its own title.
Okay.
So we bought a 3-bedroom, 2-bathroom, double garage townhouse for around $950 in the eastern suburbs. So we got it under market. But then with the garage, it was about 36 square metres. So we got a DA within 6 months and converted that into a main bedroom and a study.
Okay.
So now the home's a 4-bed, 2-bath, and then put a carport in front of the garage. By doing that, we've added 600 grand worth of value.
So this is essentially a family business in inverted commas, right? Like,
It's a hobby that, we can make money
out
out
of.
of.
You can make money off.
Yeah.
So what's your role as part of all this? Are you the buyer? Are you the, sounds like your dad's the painter.
Dad's the labourer.
He's the labourer. So who's sort of like, tell me about the process for exploring opportunities and then capitalising on them. Is it you going, oh, look, I found this, and you go, okay, let's do it?
Pretty much.
Yeah.
Yeah.
Okay. So it's not too onerous or, stiff or serious. It's just
you've
got a good feel for it.
It's pretty much, I find the opportunities, I flick it to mum. She's kind of the decision maker.
Okay.
Yeah. Like pretty much Dad just goes, ask your mother. And so she either says yay or nay.
So what's the reason for doing all this? How old are your parents now?
67.
Okay, so they're still young, but
Yeah.
Is this what they always envisaged their retirement would look like?
No, I don't think it did. I think it comes back to my story and why I do what I do to help people, but it was because I guess my dad wasn't around that much when I was a teenager. And
Did you get heaps of McDonald's though?
yeah, we did.
Did you get sick of it?
Yeah. Oh, no.
Did it make you really fat?
No, I was pretty skinny.
Oh, really?
I was a tennis player, so it was
Okay,
just I was
there you
burning it off. But it was, I guess, Dad not being around, the only time I saw him was when renovating properties or playing tennis.
Okay.
And I think as a boy or a male, the teenage years are probably the years that you would need to be with your dad. And for me, looking back on life, I do what I do to help, I guess, people create wealth through property so they can spend more time with their kids and their family. And it's just, so it's not about me making money and everything. It's more about how can I help other people create the lifestyle so they can spend more time.
And it's a philosophy that works for you and obviously means a lot to you. So
Yep.
And so these days you work as a buyer's agent.
I do.
Okay. As
Yep.
well as doing all this other stuff.
Yep.
Investing in property yourself.
Yeah.
Yeah.
And going back to your question before, like with mum and dad, I guess part of Dad's reason for stopping work was they had a late addition to life.
Okay.
So when they were 43, they had my little sister.
Oh yeah.
And then I think Dad realised that he didn't get to spend much time with us. So he was going to spend as much time with Deanna May as they could.
Fair enough. He was in a position to be able to make that decision. So, good on him. I want to chat a little bit about, you mentioned a book beforehand. And
Yes.
This is not about me giving you a plug, but I'm quite interested about it. Let's go to a break beforehand. Back in a moment.
Propertyology regards right now as a very exciting time for investing in Australian real estate. There are some fantastic opportunities that Propertyology can help you take advantage of before buyers re-emerge from their coronavirus cocoons. Propertyology has a national focus. Now more than ever, experience and knowledge are the most valuable currency. Propertyology has that in spades. To find out how Propertyology's multi-award-winning buyers agents can help you prosper, contact them now at propertyology.com.au.
Welcome back, everyone. Here with Anjay Zazulak, chatting all things property, his philosophy towards investing, and now which looks like a career for him. How long have you been doing that for, as a buyer's agent type stuff?
8 to 10 years.
Okay, so a little while.
Yeah.
Okay. So what's this book that you're working on?
So the book came about more because people kept on asking me, how do you do what you do? What do you do? It's obviously been pretty successful with what we do. And then I just wanted to give away all the stuff that's in my head. It's just, there's a lot of books out there and there's a lot of information, but for me, it was just like, how can I give away this IP to people to help create that wealth? And so I started writing, came about the central questions like, why don't all homeowners invest in property? So then I came up with the book title, The Homeowner's Guide to Property Investing, Where to Start and What to Buy.
Okay.
And that was just more helping, because most people have an asset and there's equity in their home, but they don't realise that they can use that equity to then fund future investments, which then can help them with that wealth creation in the next 10 to 20 years. So I guess for me, it was just the sort of some of the benefits were who should be on your team to build your property portfolio, how an experienced investor thinks and functions, what to do with the equity and how to do it, but also a proven framework and process with clear, easy to follow steps to investment success and where to look to find the ideal property for your needs.
Are you enjoying the writing process? You
So
find
it's
it
already
sort of
written.
like okay.
Yeah.
All
So-
done? Is
so-
it?
Yeah, so it's going to be launched around June, July.
Oh, cool.
The writing process was easy.
Yeah.
I like writing. It was more, the hard part when you write is putting the plan and the framework together. When I had all the chapters mapped out, the easy part was the writing. And then it was just putting it together.
Well, when it comes out, make sure to send me over a copy and I'll check it out.
Will do.
I'm very vocal about better education so people are better informed in terms of making property investments. And fortunately, there's a whole bunch of people listening to this podcast, but, I'm the first to say that, broaden your education and reading books, property books is a key part of it. So get it over and we'll have a look at it. Now, what's going on with Albury? What's happening? Why are you down there?
Why? I've been buying down there for the last 8 years for clients. And it came about, I always get approached from marketing companies and property people, I won't say spooking, but
Call them what they are.
Promoting their product. Yeah. And there's a company that was promoting down in Wodonga and land and house packages. And at the time, I just go, don't really like Wodonga because you can just keep on building out for days. Like the land just keeps on going and going.
Yeah.
But then when I looked into it, Albury I found was the better side of the border.
Ooh. You're going to make some friends there.
Yeah.
You pissed off the Kiwis. you pissed off Victorians.
Oh, well, they call them Mexicans for a reason. Yeah. So it's.
I love all people equally. So you can be this way if you want, but send your hate mail to him.
Yeah.
Correct.
But what I found down with Albury is I'd have a lot of people coming to me with small budgets. So they had $200,000 or $300,000 to spend, and you couldn't buy much or anything in Sydney. And so a lot of people wouldn't help these people. So I go, well, kind of kept on resorting back to what Dad taught me. And our first purchases were for $100,000. Yeah, it might have been 20, 30 years ago, but they were cheap. So my philosophy passed on to these people saying, all right, we can buy at a low value. And for one of my clients, we bought for $180,000 on a 700 square metre block, getting $260 a week rent. So what's that, 6.5%, 7%? And now it's worth $260 4 years later. That's a jump of 30 to 40%.
It's probably not cost them too much to hold that either, particularly with interest rates where they are right now.
So most of them are positively geared. So I guess it was, for my clients, it's really finding how can I add value to them and what's their situation, because not everybody's a one-size shoe fits all. So some people want cash flow, some people want growth, some people want negatively geared properties for the depreciation. So it's not just saying, oh, where's the hotspot? Where should I buy? It's like, well, what are you trying to achieve in the next 5 to 10 years? And let's work backwards from there.
You got some numbers for us there, James?
I do, yeah. I've pulled Albury up here. Yeah, pretty much exactly what you said in terms of over 5 years, the median growth in Albury has been 31.64%. So seen some really solid returns there. 10-year average annual growth, 4.97%. Gross rental yield is sitting at 3.35%. These are for houses, by the way. Median house price, $543,000. Median unit price, $285,000. So, yeah, interesting.
Some interesting numbers there. And, I don't really get into the business of making my opinion on different suburbs and stuff. I'm not qualified enough to do it. But so you're actually going to move down that way, are you?
Yep, Friday.
Okay.
Yeah.
Wow.
So I'll be based out of there, but travelling back and forth between Sydney and Albury.
Are you going to fly or drive?
Oh, it depends.
Yeah.
I don't mind the drive, but
it's a long drive.
It's 5.5 hours.
Which way do you go? Out through Cowra and stuff, or?
I don't know, on the road, just where GPS takes me.
Yeah, all right, fair enough. Anjay, I've really enjoyed the chat. Thanks for coming in, having a yarn with us, and we'll make sure you get that book over to us when it's ready to roll, and we'll check it out. What's it called again?
The Homeowner's Guide to Property Investing.
Okay, pretty straightforward.
Pretty
nice one. Yeah, appreciate the time and sharing this journey. It's I do like these. Call it what it is, a great migrant story, right? And in New Zealand, Australia, or whatever, it's great that we live in these nations that can cultivate, good work, hard work, and people taking control of their future. So, you're, I guess, third generation is part of that now. It sounds like you're not slowing down. So keep at it.
Thank you.
Nice one. Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so the first to know what's happening in property and property investment right across Australia and New Zealand now, smartpropertyinvestment.com.au. Social media, just search Smart Property HQ. You can find us there. And please, one favour, please keep those reviews coming. Anjay's going to do it right now because I know he loves the Smart Property Investment Show so much. He's going to give it 5 stars, review wherever you listen to this podcast. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
The Trident formula, created by Sam Gordon at Australian Property Scout, is the strategic way to build a profitable property portfolio. If you're looking to perfect your strategy, go to www.australianpropertyscout.com.au to book a call with Sam himself.